Hi, welcome back to the channel. In today's episode, I want to talk about the global implications of what's happened in Venezuela because, as you'll be fully aware, Venezuela has the largest oil reserves in the world. It hasn't been developing those reserves, so it's not the world's largest producer of oil. But the impact of the USA now running Venezuela and potentially inviting back all of the US majors could potentially upset the balance of oil supplies globally. And this is going to have a really big impact on Russia as one of the biggest oil exporters, China as one of the world's biggest importers, and also the USA. So I wanted to go through what potentially might happen and what the impact is going to be. And I can tell you that it potentially is really bad news for Russia and also could be bad news for China. So we're not just talking about what's happening in Venezuela itself, the political implications. We're talking about potentially billions of dollars of impact on the Russian and Chinese economies. Now, just to give you a brief history, let's have a quick look at this chart, which shows it's an interesting chart. What we've got here is plotted countries in terms of how much oil reserves they have, which is shown across the axis on the bottom of the graph. And that's so basically you can see here it goes from 0 to 300 billion barrels of reserves. And we look at Venezuela, it's on the far right hand side. It's got the biggest reserves. Apologies, second biggest at Saudi Arabia. Apologies because Canada is missing from this chart. I didn't create it. If I did, I definitely would have put Canada on here, but I just noticed now that Canada's not showing on it. It should be because it's got the third biggest oil reserves in the world. I don't know why it's not on there. Apologies to everybody in Canada. We've then got Iran at number 3. And then on the other axis, we've got crude oil production per day. And that goes from 0 at the bottom to 14 million at the top. So the holy grail here is to be in the far right-hand side of this graph, because that would mean that you'd have the biggest reserves and that you're producing the most. That would be basically optimal position. Venezuela is on the far right-hand side in terms of biggest reserves, but as you can see, it's quite low down when you look at the left-hand axis. So it's not producing anywhere near as much oil as it should be. On average, it was producing around 1.1 million barrels in 2025. However, that's currently down to around 800,000 barrels as a result of the tightening of the sanctions and the blockade that was put in place by the USA. And you can see the USA is in the top left-hand corner of this chart. So it's actually got only, it's not one of the biggest oil countries in the world in terms of reserves, but it is producing the most. Unfortunately for the USA, it's consuming all of that oil and actually importing around about 5 million barrels of oil per day as well. So the USA is now a net importer of oil as it stands at the moment. And I think that's going to be interesting because of what might happen with the Venezuelan oil industry. But I wanted to talk about the Venezuelan oil industry just to give you a very brief recap as to what's happened, because I think there's a lot of confusion in terms of what's going on with Chevron. Are they still working in Venezuela? What's happened with ExxonMobil and ConocoPhillips? So back in the 1940s, 50s, 60s, US companies went over to Venezuela and helped develop the oil industry. So they invested the equivalent of billions of dollars at that time. It wouldn't have been billions then, but it would be today, to build up the oil industry. And things were going pretty well. And at its peak in 1970, Venezuela was producing 3.7 million barrels of oil per day, which represented around 7% of the global supply at that time. So happy days. However, in 1976, they decided, as they went all in on communism, that they were going to take all of the oil industry for themselves. So everything was nationalized. So all of the US companies lost all of their investments. So that was basically the end of US investment. Now, if we look at this chart, it shows oil production in Venezuela from the 1970s right through to the current day. And it's if we look at the purple line at the top, dark red line, whatever it might be, I'm not an expert on colours, and you can see that between 1970-ish, whatever it is, 1972, something like that, we had a sharp decline in the production of oil in Venezuela. And that was basically the period when Venezuela took over the industry itself. It was mismanaged. They didn't invest back into the infrastructure, and basically it went to rack and ruin. And you can see that by the sort of late 80s, it was down to around about 1.7 million barrels per day from that high of 3.7. So they'd lost around 2 million barrels of production. And that wasn't because they didn't have enough oil in the ground. They had plenty of oil. They just weren't very efficient at pulling it out. Now, if you have a look at what happened in the 1990s, you can see that production started increasing again quite rapidly. And the reason for that was because Venezuela invited all of the US majors back in. So they basically said, look, we've changed everything. We don't want to be fully communist anymore. We want to invite you back in and help to develop our oil industry again. And the oil majors in the US said, happy days, okay, we will do that. So the three big companies, ExxonMobil, ConocoPhillips, and Chevron, all went back in and started reinvesting. So everybody forgot what had happened in 1976 and just moved on to the new regime. And that went well to the end of the 1990s. You can see production got up to above 3 million barrels of oil per day again because the Americans were back in there. And then you can see that production started to come back down again. And the reason for that was that a new president had come into power, Hugo Chavez. And in 2007, he put an ultimatum to the three big oil majors and said, okay, we now want a bigger slice of the pie. We want more of the profits. You're taking too much profit out of Venezuela. So sign this new deal and we'll carry on dealing with you as we are. So at that point, ExxonMobil and ConocoPhillips refused to sign those deals. They went to court to basically sue Venezuela. Chevron agreed to sign the deal, so they stayed in Venezuela. The other two pulled out. And you can see that since that time, the amount of oil being produced in Venezuela has crashed. And then we had the new sanctions that were put into place in 2020, and it got to an all-time low of around about 500,000 barrels per day in that year. And you can see that it started to improve a bit, and that was because Chevron were given a license to produce a limited amount of oil. So production has got back up towards 1 million barrels per day. The overall summary is that Venezuela has not looked after its oil industry. It's in a very poor state. And so even if all of the oil majors do go back in now that the USA is running the country, they're not going to get back up to 3.7 million barrels of oil production because they need to basically rebuild a lot of the infrastructure. It's going to take a lot of investment and it's going to take a lot of time to get back up there. Now, just before we talk about the implications for Russia, could I ask anybody that hasn't subscribed yet to please hit that subscriber button? Really helps me with the algorithm and also puts a smile on my face. And also, I wanted to remind you about my competition, whereby you can win my house that's located close to one of the best beaches in the whole of the UK. If you're not interested in that, you can pick up £250,000 in cash in any currency that you like. This is another way of supporting the channel. Rather than send me a YouTube super thanks or buying me a coffee, you can buy a ticket in the draw. If you look at the QR code on the screen now, it'll take you straight through to the independent company that's holding that competition for me. They will be picking a winner at random. You can also find that in the link in the description below. This chart shows the movement in the price of Brent crude oil, which is the general benchmark for oil over the past 5 years. And we've looked at this chart many times before. I'm sure you'll be familiar with the shape of it. You can see that after Russia's invasion of Ukraine, oil prices globally got up above $100 per barrel. That was the first time for a very long time that it hit those levels. And that's good news if you're an oil-producing country such as Russia. Russia produces a huge amount of oil, and the vast majority of it is exported. That's what the Russian economy has been built upon, selling oil to other countries. And as you can see, the price of oil since that high at the beginning of 2022 has come right down. And the current level is now below $60 per barrel. And I think that's interesting because if you've been following what's been going on in the war in Ukraine, you'll know that the oil price cap that was set by the West to try to stop Russia from making huge profits from oil was actually set at $60 per barrel. So at that point, which was a couple of years ago, everybody was selling their oil for significantly more, $80 or $90 per barrel. But the market price is now down to 60. And that means that the price of Russian oil is significantly below 60 because Russia is still having to sell its oil at a discount to encourage buyers to take the risk, because you're running the risk of being hit with secondary sanctions. Now, obviously, if you've been following me, you'll know that the two biggest oil companies in Russia, Rosneft and Lukoil, have now been hit with direct sanctions. So you're no longer able to buy directly from those two biggest companies. So even if you want to buy Russian oil now, you'd have to buy it from a smaller producer, or probably on the black market, the grey market, whatever you want to call it. So the point here, though, is that as the price of oil goes down, so does the profitability for all of the countries that are exporting oil. And the country that is going to suffer the most is Russia. So Russia is facing a double whammy right now because general prices are down in the oil markets. And it's now facing a bigger problem because of the increase in the sanctions. So it's having to cut the price of its oil even further. And the problem that the USA taking over Venezuela is going to represent for Russia is that it's likely that as the US majors are invited into Venezuela to fix the broken industry in Venezuela, the output will increase. Global output for oil will go up. Investment banks in the US, JP Morgan and Goldman Sachs, have put an estimate as to what they think will happen with Venezuelan oil. JP Morgan are saying that they believe that it could get up to 1.5 million barrels. Goldman Sachs are saying it could get as high as 2 million barrels. Now, the global market for oil is very finely balanced, and 500,000 barrels per day actually tips the market from undersupply to oversupply. We've actually seen that recently with OPEC Plus. They've been increasing the amount of oil that they've been producing, which is one of the reasons why oil has been going down in price. So the USA getting involved in Venezuela is going to lead to an increase in the global supply of oil. Therefore, we're likely to see the price of oil continuing to fall in 2026. The current market estimate is that we will have oversupply throughout the whole of the year, and that's really before the impact of this increase of Venezuelan oil. So this is actually really bad news for Russia. Russia exports around 7 million barrels of oil every single day. So a $1 movement in the price of oil means that it's going to lose $7 million per day. If you annualize that, that equates to $2.6 billion of income lost for Russia for every dollar that the price falls. Now, you can see from this chart that in 2025, the price came down from $80 to $20. So we're talking about 20 times 2.6 billion. So it's almost $50 billion that Russia has lost as a result of that falling price. However, you then have to factor in the fact that Russia sells its oil at a bigger discount. So it's likely to be more than $50 billion impact. And then if we see Venezuelan oil driving down the price, Goldman Sachs have estimated that it could have a $4 or $5 impact on the price of a barrel of oil. That's going to have a massive impact on the Russian economy at a time when Russia is already struggling with regards to spending far more than it's earning. So this is going to drive down Russia's income even further. And Russia was already facing problems because, as you can see from this chart, which shows the amount of oil that's currently held on tankers floating on the ocean with nowhere to go, we've seen a massive increase over the past couple of months since the increased sanctions were applied against the Russian oil companies. And Russia currently has millions of barrels of oil with nowhere to be delivered. So Russia is going to run out of capacity soon in terms of storing all of that oil on tankers. So some really serious problems building for Russia. But there's also some serious implications for China. If we have a look at this chart, it shows the destination of Venezuelan crude oil exports dating back to the start of 2024. So we've got different color coding here, but we just focus in on the orange and yellow and then dark blue sections. So the orange section at the bottom is China. So you can see that since the start of 2024, China has been the biggest buyer of Venezuelan oil, mainly because it hasn't sanctioned Venezuela. The USA has. It was allowing some imports as a result of the Chevron license. So you can see the yellow section here shows how much the USA has been importing. So it has been importing some. However, since the middle of 2025, those exports to the USA have virtually disappeared. And what we have seen is a huge increase in the blue section, which is unknown. So nobody knows where those oil exports have been delivered to. In all likelihood, it's China. So if you look at what's been going on here, I think China has consistently been buying a lot of Venezuelan oil, but some of it is now masked through the shadow fleet, dark fleet, whatever you want to call it. And the problem that the USA taking over Venezuelan oil is going to have for China is that the USA is now likely to divert all of the Venezuelan oil to the USA because this is heavy crude, which is difficult to refine. However, the US refineries are set up to be able to manage it because in the past they were taking a lot of Venezuelan oil. So they're quite happy processing Venezuelan oil. And the reason why this represents a problem for China is because this oil is very cheap. It's been trading well below market levels because Venezuela is under sanctions. So it's the same as buying Russian oil. You can buy it at a deep discount. So that's been good news for China. And China imports the most oil out of every country in the world, about 11 million barrels per day. And some of it's been coming from Venezuela. But as that oil moves to the USA, then China is going to have to find somewhere else to buy it from. And that's going to be much more expensive because Venezuelan oil is cheap. Now, it could obviously try to buy from Russia, but the problem that poses is that the sanctions have been ramped up massively. So Chinese companies would be running the risk of being hit with secondary sanctions. So I just wanted to highlight the fact that China is another potential loser as a result of the USA taking over the Venezuelan oil industry. Now, as we discussed earlier in this video, the USA is currently a net importer of oil. It's importing around 5 million barrels per day. So the fact that it's now going to be involved heavily in the Venezuelan oil industry and potentially increasing the amount that it's producing and diverting that oil to the USA is good news for the US because it's going to be able to get that oil at a good price because it's going to be involved in producing it. It's also relatively easy to transport to the USA. It's quite close to it. So this should be beneficial to the US in terms of firstly securing those supplies and secondly getting them at a good price. So this will drive down the cost for all of the importers into the US and potentially mean that it's good news for the US economy. So the overall summary of today's video is that the US taking over the Venezuelan oil industry represents seriously bad problems for Russia because we're already seeing oil prices going down, and that's likely to accelerate as Venezuelan oil re-enters the global markets. In addition to that, the increased sanctions on Russia is going to accentuate the problem. So Russia is facing some serious issues right now. But in addition to Russia, China is also going to see an increase in its costs because it's been buying cheap Venezuelan oil for the last few years, but that's likely to stop at some point in the near future. Now, it will be interesting to see what happens exactly with the US majors because they've been in Venezuela 2 times before and had their fingers burned. So they will be a little bit cautious in terms of signing up any deals because as soon as the US stops running the country, there's obviously the risk that Venezuela could revert back to its communist ways and say, actually, we're going to keep all of the profits. Thank you very much for fixing our oil industry. But I don't think that is likely to happen because of what's happened with regards to the removal of Nicolas Maduro and the US's military involvement. So there's a lot of really interesting things going on at the moment, and I wanted to really bring you up to speed as to what was happening and also talk about what the implications of the oil industry and oil prices are for the USA, Russia, and China. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. That's what I'm trying to do. If you've liked what I said, please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget I'm running my competition where you can win my beach house or £250,000 in cash. It's another way of supporting the channel. So please buy a ticket. You can see the QR code on the screen now or the link in the description below. Thank you so much to everyone that supported me in other ways. Lots of people have bought me coffees recently. I really appreciate that. Thank you so much. I've also seen a lot of YouTube super thanks, so thank you for that. And if you've signed up as a patron or a member or a Buy Me a Coffee member, really appreciate that long-term support. And here's something to put a smile on your face.